I said, when I'm 35, I'm going to have an option. I want to give myself a choice. Is this the career that I stay in? Or how will I be able to set myself up to have the option to choose? And that's really what I wanted. Seeking fire, retiring early is great, but I just wanted to have options. So that's where real estate came in. Wealth is not being able to swipe your credit card for large bills or anything like that. That's not wealth. That's a transaction. Wealth is when your money is growing for you while you're sleeping, as they say. It's compounding in the background. It's constantly growing. That's wealth, when you can generate a system that compounds your wealth.
Most people think saving in a bank is smart. Why is that keeping them broke? Welcome to Built to Scale, the podcast where vision meets action. I'm your host, Quinn Schilz, founder of Master Roofing, and I'm here to pull back the curtain on building world-class teams, scaling companies, and turning bold ideas into unstoppable momentum. Let's get to work. From representing some of the biggest names behind the lens to now teaching creators, entrepreneurs, and real estate syndicators how to build their own banks, today's guest is flipping the script on how to build wealth and who gets to be behind it. She's the founder of Hey Raise, a cutting-edge marketing agency helping capital raisers scale their brands with trust-first design and razor-sharp storytelling. But what's her real superpower? Teaching you how to become your own banker using infinite banking concept, an asset strategy leveraged by Walt Disney, Ray Kroc, and today's wealthiest families for over a century. She started with a career in fashion and advertising, and evolved into a mission to show creators and investors how to ditch the old rules, build generational wealth, and fund every phase of life without waiting on the stock market or Wall Street. She built a brand, a movement, and a financial ecosystem that empowers you to stop trading time for money and start living on your own terms. Adrian Rae, welcome to Built to Scale. Let's get into it.
Awesome. Thank you.
Absolutely. So you left the world of fashion photography to start selling life insurance. What happened?
That sounds so weird when you put it that way, but I guess that really is kind of the reality of it. Yeah, I was representing commercial fashion and advertising photographers at that point in my life. I was pursuing real estate as a retirement plan, kind of a backup plan. You know, it's a hard, cutthroat business being in that world, and there were a lot of outside influences that dictate how the market reacts, with the introduction of AI, that at the time I didn't even realize it, but that has been a huge impact to that industry. So I was looking for a way to create passive income and have options in the future. So that's where I discovered real estate. And it was during that journey of learning and growing and talking to people that I realized there are a lot of real estate investors out there that are using this process called infinite banking and a whole life policy, and they're borrowing against it. That was all I knew, which is nothing, just a bunch of words at the time. I was like, that is so weird. What is this thing? And so it popped up a couple times on some different podcasts. And then I started doing my own research. I was like, this is the coolest thing ever. I like real estate because it's not Wall Street, basically. It's an alternative asset, higher yield. It's a stable asset as well. People always need a place to live. And so then pair that with a tool that can guarantee no losses. That's bananas. A financial tool that has growth that says you can't lose money in this asset. I was like, that's how these two components will play together. And so then as an agent, I'm helping all of my artists create wealth by getting them clients, helping them build their personal brands, build their portfolios. So they're ramping up their careers, but as soon as a creative director or a company goes under, as soon as somebody says that they're no longer the one who's going to be working on set, there goes that opportunity. So they only make money when they're on set. And they're like, I need passive income. How am I going to make passive income? I don't want to be a TikTok star. Meanwhile, I'm buying real estate and building a short-term rental portfolio and learning all there is to know about whole life and how to leverage that to create a foundation, a warehouse of wealth, and then leverage that, parlay it into the real estate component. And so I had this whole strategy in the back of my mind that I wasn't sharing with that audience at the time.
Mm-hmm.
And so that's when I knew, like, I have a different purpose, a different calling. I need to start helping people understand that there are options that they don't know about. Wall Street doesn't want you to know about that. They want you to dump all of your money into the market. And and so it's definitely a little bit under the rug. It's not the most popular route for building wealth.
Okay.
Life insurance just isn't sexy. I find it to be incredibly sexy. But, that's just me. So, yeah. So that's how I ended up there. That's a really long story to get me to where I am today.
I love it. What do Walt Disney, McDonald's, and Adrian Rae all have in common? And I think you just kind of touched on it with like the infinite banking power.
Yeah. So I think that's having an idea and needing a source of funding. And banks, people, whomever, traditional financing telling you no.
Mm-hmm.
But in the back of your pocket, you've got this warehouse where you've stored up some value that you can borrow against it. No questions asked. Nobody says, show me your tax return. Show me, yada, 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 nothing.
When you're talking about a life insurance policy
Yep.
that you can access these funds with. So it's
Yep.
not what people traditionally think of life insurance. It's just something, God forbid, somebody passes away. It's really, you're talking about like, it's a way that you can use when you're still living and borrow against it for your business.
Exactly. So that's
So how does that work?
So of course it has a death benefit component, which is great. You need that. But
just by the name of it, I think that's the first thing that comes to mind for everyone,
totally.
Right?
Yeah. And if you go and you pursue a whole life policy, which is the only permanent form that I'm talking about here, whole life.
Okay. And we'll get into that. I have questions on it too.
Okay. Yeah. So if you were to go shopping around for that, somebody's going to sell you a traditional whole life policy. It's going to be ridiculously expensive.
Got it. Okay.
And you won't be growing much cash value year over year. And you're like, why would anybody do this? This is so dumb. Okay, but when you go to somebody who knows how to actually structure the policy, they're going to work backwards. They're not going to say, how much death benefit do you want? They're going to say, what's your saving strategy? What are your end goals? And then from there, we actually have a very small death benefit, a couple $100,000 maybe at most. When really your human life value would require a couple mil. But the idea is that you're going to be using it to acquire assets in the future. You're going to be borrowing against it. So we're structuring these so that you can accumulate the highest amount of cash value. So that means your base premium is relatively small and you've got a much larger paid up additions rider. So now we're getting a little technical, but when they had
what does that mean for somebody who doesn't know paid up additions rider?
Okay. So typically you're going to have about 10%, 90 being the base, meaning you're paying all of that for the insurance itself to cover the cost of that large death benefit. And the paid up additions is actually how you generate cash value, how you grow, how your policy value grows over time. And that's just the traditional route. But when we're doing this with cash value being the intention and the end goal, we're going to shrink that. So the base value is maybe 30% or 40% of your monthly contribution. And the rest of what you're contributing on a monthly basis is directly contributing to the growth of the policy. So your death benefit is a lot smaller because the base is now a smaller amount. You're not taking, let's say you've got $1,000 a month to put towards a policy. Instead of attributing 800 to 900 of that to the base, so you can have this fat death benefit. Instead, we're going to attribute 700 of that to the paid up additions, 300 of that to the base. And now that base is reflective of what your death benefit will be, which will be smaller, but you'll be growing much greater value faster.
Got it. So it's in a way like you're using life insurance as a vehicle, right? For somebody listening, like to get you the assets and build the businesses. So you're using it as like an investment. So instead of investing in a 401k or another type of investment stock market, you're able to buy real estate or buy businesses and using the funds from the growth you've had. Again, you're borrowing against that policy, correct?
Exactly. It's your warehouse. It starts there. That's the first move. I have this concept called no dead end dollars. And basically what that means is you've got all these various ways of making money, of acquiring dollars. You're gifted it, you earn it, however it comes into your world. From there, it leaves your world relatively quickly for a lot of people. And it goes towards rent. It goes towards whatever. All
your expenses.
Whatever the hell you spend it on. Exactly. So with a no dead end dollars mindset, first, it's coming into you and you're putting it into your warehouse. From there, it's set to grow consistently, it's set to grow anywhere from 4.5% to 6%. Let's say that. Let's call it 5. Continuously compounding, interruption free.
At what rate usually?
About 5%.
Okay.
Yeah. And then you can borrow against it.
Okay.
Leverage that, put it into a cash flowing asset. So now you're going to put it into something that produces cash flow for you. Maybe it's a multifamily, maybe it's a business, whatever that may be. And now that cash flow is what you're living off of. So every dollar that comes into your world has a job, and you put that dollar to work to earn for you. And then that's going to create the cash flow that then you live off of. Can you do this in a weekend, overnight, in a year? No, it takes a little bit of time, but so does investing in the stock market to get those types of returns. That it's a long road.
It's not get rich quick, but it's get rich for sure. Like if you focus the process, if you just work that system and play that game for a long enough time, you're saving money and you're getting interest, and there's going to be a compound effect to it.
Absolutely. It's an uninterrupted compound, because when you borrow against it, you're not removing money from the account. You're taking a carbon copy of that dollar that is earning 5. You're going to go borrow it at 5, roughly, but you're going to put it into an asset that's going to be earning you 10 to 15%. So you've got an arbitrage of 15 to 20%.
It's 5, yeah. So
you've got an arbitrage,
you make sure
so you're
10-15% on that money.
Meanwhile, the money that's in,
it's still working.
The cash value is still growing. Exactly.
So is life insurance actually the best kept secret of the wealthy? Still coming up. Most people think saving in a bank is smart. Why is that keeping them broke? SoCal homeowners, why pay $15,000, $20,000, or even $30,000 for a new roof when instead you can get a new roof for only less than $100 per month? Here at Master Roofing, we serve homeowners with high quality roofs with no hefty upfront costs. So give your house the roof it deserves with 0 down and low monthly payments. Why wait? Click the link below to get you a roof you deserve for payments you can afford. Is life insurance actually the best kept secret of the wealthy?
Absolutely. I don't know what other secrets they have, but I mean, I'm sure they've all got secrets.
If you had to start from scratch with $0, what would you do first?
Well, you got to secure yourself. You got to let's say you've got all your bases figured out. Your house, your home, living, shelter, all your basic needs. And let's say you don't have credit card debt or anything like that. I would take any excess that I can and start putting it into the life insurance policy, the whole life insurance policy. As you begin to earn more, you're able to put more in there. Once your cash value is built up, that's when you start to transition into that no debt end dollars mindset where you can actually start borrowing against it.
So let's pause right there for a second. So let's say you make $10,000 a month, okay? And your expenses are $4,000. So you have extra $6,000 a month you can put somewhere. What would you do in that case?
I'd go straight into the life insurance policy.
With the $6,000 every month?
Yeah.
Okay. And then how, so in a year, you're at 60, like $70,000, $72,000, right?
Yeah.
So how do you build this up so that you can start to borrow against that 72 and then
Yeah. So then within the year,
an example.
Okay. Within the year 1, you won't be able to borrow 100% of that because there are administrative and insurance fees that you have to pay. So in due time, you'll be able to borrow out just as much as you put in. But by the end of that year, you'll be able to borrow out $50,000. So I would start looking around saying, what is my strategy going to be? Do I need...
And $50,000 is still working for you inside that policy?
Yes.
And when you borrow against it, are you borrowing at what interest rate, to borrow against it?
It depends on the company, but it's roughly 5%.
To borrow against it?
To borrow against it.
So sorry. So you have to still pay interest on the money you borrow against it, 5%, you're making 5%. So you're basically netting 0, but then the asset you invested in is going to make you the money?
Yes.
Okay.
Plus, so you have 70 in there. You're borrowing 50.
Okay.
You're leveraging 50.
Okay.
70,000 is still growing at roughly 5%. You've only borrowed 50. You've got a loan out on that now. So the interest on that is about 5%. Okay. These just happen to be similar numbers. Okay. I wish they were different for example purposes, but you get the idea here. You're still making even more money over here, and you're going to go put it into an investment that's going to generate...
Make you more than 5%
exactly
that you borrowed.
So you can pay off that loan that you borrowed out easily with the cash flow, and you're still making the money. And yeah.
It's awesome. I think that's huge for a lot of people, and a lot of people don't realize those strategies, obviously, right?
Yeah.
And so how do you get investors to trust you before they ever speak to you? Like, we guess we could start talking about hay raise here.
Yeah, I was gonna say, we do a lot of this type of work within hay raise. We've got a lot of real estate or alternative asset operators that come to us, say, I've been raising capital from friends and family. I need to meet more investors. I need people to know who I am. I need to expand my network. So what our specialty is actually branding, creating the brand story, getting your face online, figuring out what that message is that you're going to lead with, because you need to have a consistent story to tell people about who you are, what your intentions are, and your investment philosophy strategy, and keeping it really succinct and neat and tidy. And that is your consistent touch point across all digital, your whole entire digital presence. So that's consistent. People go to a website for like a 2-scroll, 3-second gut check. They're not really going there to get all the information. They're going to decide, do I want to get on the phone with this person? Are they legitimate? Is whoever pointed me in their direction, do I trust that? That's really what it's for.
Yeah.
So keep that message really tight on the website, and then the branding consistent, so that when they go look at you on, all your other social media platforms, have an identity there, it's consistent, and they're not trying to connect dots. Make it super easy for people. That's, it's probably the best way to get started.
So concise information that's like gets to the point, and like when people do their 2-second scroll, like they believe you're the best based on, you got to get that information really dialed in that main page and in the website.
Yeah. The next move is to get them to take the next action. That's what you want that page to do.
So a call to action of some sort. Okay. Get their information, get their name, phone number, email, something to get them into your ecosystem.
Yeah.
What do you find like the dumbest thing people do with their money when they start making real income?
Buy a ridiculous car, I think. They go blow their money on a depreciating asset. I'm not a car person, so, that's my perspective. But I think it's probably the dumbest thing. Next to that is chasing after some speculative investment before you really secure a financial foundation of how, have a plan of how you're going to grow that money. If you don't want to do whole life or anything like that, fine, but put it into more of a stable asset so that it can continue to grow. So that when the rug gets ripped out from under you, whatever your source of income is, you've still got, some growth happening for that money.
Most people think saving in a bank is smart. Why is that keeping them broke?
There's no return on that money, and it's lower than inflation. You're losing money by keeping it in a bank.
Yeah.
Even a high yield savings account, the best 4 or 5%, it's not keeping up with inflation here in California. And then let's say you want to go do something with that money. You've just removed it. You've saved, withdraw down to zero. This is why I love whole life. Yeah, it's not the highest return, but you save, borrow, keep growing. So you're working your butt off to just go back down to zero. How does that get you ahead? It's a constant cycle of starting and stopping.
I've heard people talk about like when they have the like a big portfolio in the stock market, like, they won't always pull out the money in the stock market. They'll borrow against their stock portfolio too.
Yeah.
It sounds like a similar concept, and like you want to make sure that it continues, the actual asset continues to grow, and you want to borrow against it, because when you're borrowing, it's also a tax-free event, right? When you're pulling the money out, like on the life insurance policy, like you're getting a loan, so it's not income, right? So you're not paying income tax on it.
Correct.
It's like you're borrowing its assets. So yes, you have maybe some interest to pay, but if it's invested properly into the asset where it makes sense, you're getting a tax-free event, and you're saving money on that.
Yeah, you could take the similar principles of the infinite banking concept,
okay,
and apply it to your brokerage account.
Okay.
God, I can't even say those words because I hate that idea.
Okay.
Because it's a volatile asset. Like
you can't lose on the life insurance. The way I understand it, right? It's like it doesn't. You don't really get the falls the same way. But you also can't technically buy like Tesla stock through your life insurance policy, right?
No,
you're more mirroring the market in general.
Yeah, but you wouldn't want to, because the two different perspectives. One is investing speculative. The other one is a safe haven. So just slightly different. I would rather build up my safe haven and then go buy Tesla stock with.
So
with
like
my
you
whole
you
life.
personally, like would you do the whole life thing for all your eggs in one basket, or would you say I'm going to put most of my stuff in here, but maybe I'm going to take a bet. I have extra money I've already made through my whole life. I'm going to take a bet on Apple right now. I'm going to take a bet on Tesla right now or something, and see, maybe I can get a huge return on that, and then I can take that money I make from that, invest it in the whole life policy. Like what's your take on the diversity of that?
Yeah, you're definitely asking somebody who is so super pro whole life.
That's what I
So
want to know your opinion on it.
yeah,
Yeah.
I'm not big on picking individual stocks.
So you don't have a 401k and IRA. You're 100%. You're going this route.
Whole life and real estate
Okay.
are my avenues. Yeah. If I were to go, speculative business investing, I would do an ETF within an industry that I believe is going to be.
What's an ETF for someone who doesn't know?
It's a fund of similar types of companies.
Okay.
So yeah, instead of investing in one stock, you're getting some diversification
you still buy
across
it
a
like
range.
on an exchange,
Yeah.
right? It's just, it would be like a basket of companies instead of just
the one. Yeah.
Got it.
I think that's a little bit better than individual stock. By the time us lay people get around to paying for the stock price on whatever the stock may be, you're not getting the best price. So not like that's the end of the world. You can still make some money over time, but I love the idea of knowing I'm not going to lose money. Some people, it's your risk assessment. Some people like the thrill of investing in stocks. I like knowing the money's secure.
Because even if you're in the S&P 500 and in the market crashes, right? Like, and you're in the stock market, you have to wait years sometimes for that portfolio to go recover, right?
Yeah.
When you're in the route that you're saying with the life insurance, whole life policy, you're not going to take that hit, right? You could still borrow, even in 2008, you could still borrow against, if you were at 250, it's not going to drop down, right? It's going to, you'd still be able to borrow at 250, right?
And that's why it's such an awesome tool for planning for retirement. Even if you've got a 401k and you like the stock market, knock yourself out. It's a great volatility buffer for those times when you are in retirement years and you need to pay for your life, but it's a down market. If you start withdrawing from your stock, you are going to incredibly hinder the length of time that you'll have money left over for your retirement. Like you're shortening the lifespan of your funds.
Have you started to have you borrowed against your policy?
No,
before?
I'm still building it.
Okay.
Yeah.
Because what I was going to ask is, like, when you do borrow against it, like, do you just go to like a traditional bank, like go to Chase to get like a loan against it, or do you go actually to
much easier?
How do you do it? How do you borrow against it?
You just submit the request to the insurance company.
Can they deny your request?
Typically they won't. They would only deny if you don't have enough cash value.
Got it. Okay.
Yeah.
For what you're asking for. So if you okay, so whatever's the cash value of the account, you can technically always borrow against it for any reason, and they shouldn't deny you.
Yeah. Yeah.
So they're the one giving you the loan. It's actually the insurance company. It's not like a third party that you're getting a loan against this asset.
Correct.
Got it. Okay, that's what I was curious about.
Yep.
How much money can you actually make with your own banking policy?
It's infinite. Totally infinite.
No cap.
You mean in the policy itself? Like how much cash value can you grow in there? Because once you borrow against it, you can go put it into something else and you could just recycle those dollars over and over again.
Got it. Okay, because you're not looking at, what about in the policy itself? Is there a cap for one policy? Can you have multiple policies?
It depends on your human life value. You can have as many policies. Calculated?
That sounds like Gary Brecka, what he used to do before.
Okay. Well, it's calculated based on the amount of working years that you have.
Do you know
left.
who Gary Brecka is?
The name is familiar.
He was like the one with 10x Health, and like he's like this. He used to work for life insurance companies before he started that. So I brought it up because his job was like, he was like I don't want to misquote it, but he's like he went to school to like study the science of life expectancy, and so he actually studied that of like. So I'm wondering if this has correlation to how they figure out what the human life value is. So anyways, I'll let you continue answering that.
Still coming up.
So when I'm 35, I'm going to have an option. I want to give myself a choice. Is this the career that I stay in, or how will I be able to set myself up to have the option to choose? And that's really what I wanted. Seeking fire, retiring early is great, but I just wanted to have options. So that's where real estate came in. Wealth is not being able to swipe your credit card for large bills or anything like that. That's not wealth. That's a transaction. Well, there is a calculation.
There's an algorithm
for it.
to it. Yeah.
Yeah. It's basically, what are you making today and how many more working years do you have left?
Okay.
And so it obviously can grow over time, but in that moment when they're when they're evaluating what your human life value is to know how much you can qualify for on a life insurance policy.
Got it.
That's the metric that they're going to be using. So as your human life value can increase, you can open up other policies. And the first one you open, you're not going to max it out.
Can a business have its a life insurance policy, or because I asked that question about Walt Disney and all this, right? So is it like was that actually like the person Walt Disney who had the policy, or would it be like his business?
My understanding was it was his personal policy.
Oh, wow. Okay.
Yeah, some of these famous stories that you hear about, they're personal ones. A business can have a life insurance policy, and you can use it to supplement, like instead of retirement funds, you can use life insurance. You can have policies on key people in the business. So 100%. Yeah.
You help creators retire early. What's the catch?
I mean, the catch is they may want to keep creating. And the catch is retire early sounds like a really fantastic thing, but it means something different for everybody. And maybe retiring early is 50, maybe retiring early is 30. But what are you going to do if you're 30 and you retire early for the rest of your life? So
travel the world maybe, but I guess that gets boring probably after a little while.
You're probably going to start creating content again, you know?
Yeah.
So are you really retired at that point? You know, we all have this drive to do something. And I don't think sitting still and being traditionally retired is what we're supposed to be meant for. So what's the catch? I mean, I don't know that there's a catch. I think it's more like a personal choice. And how do you want to live your life?
What's the biggest mistake you made in business, and how did it nearly break you?
I feel like I'm making mistakes every day. That's part of the journey.
Totally.
How did it nearly break me? I don't know that any one action has nearly broken me. I think there's a compounding effect of being distracted and not having direction, having, procrastination, being a default. All of those things won't get you very far as an entrepreneur. You have to be head down, focused every day. You know, I quit my job because the hours were insane. It was nonstop. It was relentless. To get ahead, it was going to be more of the same. And then I started my own business, and now I work even more. Common story for a lot of people that are starting their business. Takes a while to actually get to that point where you're not working as much. So I don't think there's any time that I have been distracted and just tried to shut off. Probably here's at least a decent example. Early on, I took off and traveled for about 3 weeks. I was like, I'm just not going to look at business. You know, I was tired, so I didn't want to look at it. Well, I came back and business was dead. It's like, go figure, because I was just gallivanting around Europe and brushing off the obligations to this company. So being able to balance having, a social life and active life with the obligations of building this thing. If you're committed to it, you've got to do it. You've got to put your head down and just go. And that's kind of just the nature of it.
How did you transition from being a photographer's agent to building a financial strategy firm?
There was no transition between the two. It was a cold turkey. In the background, I was learning and growing.
While you were still at the previous.
Yeah.
Okay.
Yeah. I wasn't making money off of it. I wasn't even a licensed agent at the time. I was just wildly passionate about it, talking to everybody that I could, learning everything about it. And I had actually said when I was about 30, I said, when I'm 35, I'm going to have an option. I want to give myself a choice. Is this the career that I stay in? Or how will I be able to set myself up to have the option to choose? And that's really what I wanted. Seeking fire, retiring early is great, but I just wanted to have options. So that's where real estate came in. So I was grinding. I think I set up like 12 listings in a year and a half with my full Airbnb listings while I had my full-time job. And that was just...
What do you mean you were setting up real estate?
Acquiring properties, separating them into 2 units, building showers, doing all the things to
Here
get
in California?
12 listings online between California and Arizona.
Wow.
Yeah. Between my properties and the ones that I owned with my partner and his as well.
Okay.
Yeah. So that led to a lot of burnout, but the goal remained the same, that there was an opportunity to buy properties very cheaply with, interest rates were ridiculous.
But you just did this recently, like during
Yeah,
COVID?
during COVID.
Okay.
Yeah, I had been saving, so I was ready. And when the opportunity became available to take advantage of those low interest rates, it was time to go. And so I grinded, and that did allow me, when my 35th birthday hit, I was able to say, okay, I've got some security here. I've got my retirement figured out. At least I knew that by the time these houses are paid off, and if I want to retire when I'm 65, I'm going to be good. I'm going to have plenty of cash flow coming in from these houses.
So you're not going to sell these. You're going to keep these and
yeah.
Yeah.
At this point. I mean, who knows what will happen? But as of right now, I know, like, if that's the route that I want to go, then I'm good.
Yeah.
So I've got
I
option
like that.
A
Yeah.
figured out. And so that gave me the opportunity to make a choice.
Mm.
And that was the goal by 35. So I made the choice to retire as an agent and pursue something that I had grown insanely passionate about. And it's been a lot of fun. And there's been a lot of twists. I thought it was going to be pursuing whole life full time, but then that's when Hay Rays quickly landed on my plate as well. And I've just been ebbing and flowing with the opportunities that are coming at me. So yeah, so now I'm kind of, I focus on whole life on more of an individual basis when people want to know about it. I can definitely help them set up policies and stuff, but my day to day is primarily Hay Rays nowadays.
So what was your income like when you made that switch, and how did you stay afloat?
When I made the switch, I wasn't making anything yet. It shut off. I had saved up. I had very little income coming in from the properties. I used my 401k to start to like fund the business startup for sure. And that was the route that I took. It was just self-funded every single day, grinding, getting clients, one client after another. I hadn't really paid myself, other than like to cover my rent. I didn't really pay myself for the first year, for sure. I was living off of savings and just reinvesting in the business. And I'm still primarily reinvesting in the business.
Totally.
So yeah.
When you say Hay Rays, what does Hay Rays do exactly?
It's a marketing agency to help primarily real estate operators raise capital. So establish their brands, pitch decks, websites, email marketing strategies. We help them build their CRM. We have a go high level agency called The Links. So we basically give them all the tools that they need to establish their marketing processes and their systems. And
for somebody looking to like buy properties and invest in them, or for the agent, you're saying?
Actually, this is for the operator, somebody who is buying a multifamily property, mobile home park, any type of larger asset where they're able to, where they need to raise capital in
like syndicate?
Yes, exactly.
Okay.
Yep. A couple models are available nowadays, but it's basically the syndication model. Yeah.
Okay. We just had a guest on a week or two ago from the group we're in, Bethany LaFlamme. I don't know if you've talked to her.
Absolutely.
Yeah. So she's like attorney for syndication, knows all the rules and stuff. So you guys have similar industry.
Yeah. Similar clients. A lot of my clients probably work with Bethany.
Because it's different sides of the business, right?
Yeah. Yep. For sure.
That's awesome. So who doubted you the most, and how did you respond to that?
I did. I doubted myself the most.
What's that like?
Yeah, I have to respond to it every day when I wake up. I feel so lucky to not have doubters in my life. Like, maybe I need a couple. I need somebody to light a fire into my ass, maybe. But like my parents, they have never really known what I do. But they've always been like, whatever you're doing, you just keep going. You can do it.
Because they don't understand it, or why?
They just believe in me.
Okay.
I don't know. They're crazy, but they just believe in me. My friends believe in me. My siblings, I think they do. They think I'm crazy. But I have been so fortunate to be surrounded by people who believe in me. The mentors that I've chosen as well, the groups that I put myself in, the rooms that I put myself in, I'm surrounded by people who just say, you can do this. You can do this. I am the problem. I've known since I remember one of my coaches on the field as a kid telling me, you are your own worst enemy. And I have been battling myself my whole life. And so I'm the problem.
Talk about that. What do you mean?
These fabricated messages uh, of doubt.
Mm.
And it's,
Just
they're,
telling yourself like I can't do this kind of.
yeah. And they're not even words that come out of my mouth. They're not
Just
really
like the
here
way
at the
you
forefront.
think of
It's
it.
so rooted in my bones to feel like I'm in the wrong room. What makes me think I can do that? And it's not even specifically those kinds of words. It's a feeling. And I've actually been working with a master NLP practitioner. And NLP is pretty broad, but
Neuro-linguistic programming.
yes. Yep. So there's a lot of ways that you can implement it or practice it.
Is it essentially like you're replacing negative thoughts with positive thoughts, or in a nutshell, or is there a lot more to it?
I think there's a lot more to it. And I think even hypnosis is a form of neuro-linguistic programming. The method that I've been pursuing with a dear friend of mine who's become my coach, like, oh man, she's a rock.
Yeah.
Trudy Kelly, she's amazing. She does mental and emotional release. And this is another name for it is timeline therapy. So at the beginning of this year, you can focus on different areas of your life. We focused on career. And basically what you do is she takes you through, figures out what some of these senses of doubt or whatever it is that you're struggling with. And I'm going to do a terrible job, explaining it. But you have to surrender to your subconscious and trust that your subconscious is answering her questions and just roll with it. And you're going back in a timeline to identify when was the first time you felt that. And you basically ask your subconscious to release it, to maintain the learnings, but release it. There's a phrase that she uses. And it is such a trip. The breakthrough sessions are 2 days and they last about 6 hours each day. And then you go through and you do goal setting and you create your avatar. Those processes happen after the fact. Since then, my business easily like 5x'd. Like it has exploded. My drive every day has improved. And whenever I fall into these moments of doubt, I have to go back and just reread all of the statements that we came up with together to remind myself. And then, if there's something else that we need to tease out, I'll go back to her and we'll do a mini breakthrough session to release one of these emotions that I'm holding. Because a lot of this stuff, it's not necessarily, you could be carrying some of these ingrained emotions from prior generations even. And that sounds absolutely nuts. But going through this process, I couldn't believe it more. It's like, it's so true that you carry generational.
Well, in a sense, like you grow up hearing like a certain phrase at home that, mom got from
Where'd
grandma.
she get that from? Where'd she get that from?
And it's just like you hear it so many times. You're in a home growing up for the first 15, 20 years of your life. Like, you know what I mean? Like, it's like, it makes sense, right? Logically. So
yeah,
that's super interesting. What did you say? I'm losing my train of thought. You said, you get these thoughts of doubt. So I think we as entrepreneurs probably get that more than anyone. And we're the ones actually still getting up, taking action, being self-disciplined and do it anyways. Yep. I think that's like an important thing for people to realize is that like, everyone has these feelings of doubt. Like even Jeff Bezos, Elon Musk, I'm sure we're humans. We have this like this feeling, but it's like the people who just make the decision to just say like, I'm gonna show up anyways. Like you're not the first person in that chair who has, failure, self-doubt, all these things, but they built something great. And it's because of the fact that it's like that it's not about how you feel, right? It's about just showing up every day and doing it anyways, regardless if the feeling, some days we're going to wake up excited. We're going to want to do it. We're going to be ready for it. Other days we're going to wake up and just not want to get out of bed, but we still get up and go and show up. And you doing all of that, creating those affirmations for yourself, creating an avatar, that actually sounds awesome. Like something that I'd be interested in because it like really can solidify to yourself when you're having those moments of like, I'm not ready to do it. I don't want to do it. Like you still have that discipline and now you're remembering like your why and why you got back to it. Right.
Yeah, absolutely. And those days where I wake up and I'm just like, I don't know, like, I just don't feel motivated. If I am able to find a jolt of energy, like I just need to tackle the day with energy strong enough so that it counters that state of doubt way more powerfully. It can wipe it out for a long time. And sometimes I just need to come at the day with like gusto suddenly when I start to feel that to overcome it. So, you can still go through the day step by step. And I've done this because I've tested it, just take the action. But if you come at it with a level of energy that's even greater than you would have done on a regular day, that can tip the scale in the right direction for you.
What kind of personal sacrifices did you have to make early on?
In my career, or just in this
Just with that, I guess
entrepreneurial?
that transition, like moving into like being your own business.
Yeah. Well, one, the financial, like usually getting started, especially if you quit a well-earned, a good W-2 job, you lose that security.
Mm.
You lose a lot of that freedom to just pick up and go with friends. A lot of my friends think I'm a bit of a workaholic because I work from sunrise to sundown. Luckily, I love what I do now, and I'm doing it for myself and for my future. I'm building something. So you have to just remind yourself of that, because you have to make a ton of sacrifices. You may want to believe that you've reached the end goal. You start seeing the first paycheck or two come in. You got your first clients, but you have to really, you can't get delusional about that.
Mm-hmm.
You have to stay focused on what the end goal is. Like, what is that ultimate target? And keep making the sacrifices to get there, because you've sacrificed enough to get to step one. And that's just the beginning, though. The sacrifices don't stop. It doesn't get any easier. You have to just keep pushing until you really reach the final goal.
What were your first few steps from turning this concept into a real business? Like,
when I decided that Hay Raise was going to become a real business, I'd been doing some work with colleagues. We were looking at taking down acquiring a building, and together, some of us came together, 3 of us. And so like, let's establish a business. We're gonna have to create the deck. So I was running the marketing on that. So that was good proof of concept. Some other people started asking me to help them out as well, built a couple websites. So it started a bit organically.
So a little bit of kind of like freelance work maybe in the beginning.
Yep.
Okay.
Yep. Started as freelance. And then I read the book. Well, prior to reading the book, hold on a second, I just decided in a weekend, like, all right, let's formalize this. Let's see what happens. So then I built Hay Raise, a website. I was like, great, we're done. Did it in a weekend. I didn't want to put too much energy into it. Let's just see. And it's not like leads started flowing in because there was a website. That's not what happens. But it was kind of for me to legitimize it, to feel like we're open for business. We're doing this. And then I read 10X is easier than 2X. Phenomenal book. And that's what really like set me off on this track. Like, we're gonna do this. We're gonna 10X this thing.
And what were those like steps you did? Like, was it like you guys started getting the business, you built the web, step one was like building the website, and then did you like kind of make a checklist of like, I got to do these things to like build the business, or did it just kind of organically start coming together?
It's been organic for sure. And maybe a checklist would have been nice. I should still probably do a checklist. I've got so many checklists all over the place, actually.
Right?
But yeah, it was definitely organic. I'm involved in some networking groups and some masterminds that are great lead sources.
Mm-hmm.
So I've never really had to market the agency, for better or for worse.
Mm.
So that's been interesting, because we're now starting to dabble in that, get into that. But I've been growing the team organically, adding one piece at a time. All right, obviously I need a designer. I'm not a designer. I'm like, I've got creative ideas.
Yeah.
So I brought on a designer. All right, we're going to need a developer. Brought on a developer, started with my former partner. He's a developer, brought in another one, and just started adding pieces.
Yeah.
As I listened to my audience to figure out what is it that they need, and what opportunities is the market presenting itself, to what opportunities is technology presenting. Let's solve some of these problems for them. So it's been a constant pivot and learning, so much adding products and options for clients, solving their problems. Somebody says, hey, do you do this? Yeah, I do that. Like, it's just been a lot of yesing every step of the way. And then finding the who's to help me actually execute. I still do a lot of the fulfillment, but we recently brought on copywriter and a content strategist, and a project manager.
Wow.
Yeah. So that's,
so you're really starting to develop the team.
Yep, absolutely. Yeah.
Did you bootstrap or did you take funding?
Bootstrap. Yeah.
Yeah. When did you realize you needed a team?
Day one. Like, man, I can't do this alone. And I don't want to do it alone.
Yeah.
That's the other thing. I don't, my previous job during COVID, we got rid of our office. So I had already been remote for 3 years at that point. It was lonely. Yeah. It's crazy being like just staring at the same wall all day and being on the phone, talking to people. Human interaction is really great. I'm still a very remote company, but at least I'm speaking to a lot of regular faces. We're building rapport as a team.
Yeah.
And so that's been really great. But I knew from day one, I needed to build a team. I need to find partners that want to get in on this with me.
So what was your first hire, and like what would you do differently now?
My first hire was the designer, but it's been on like a contract basis ever since. What I would do differently, though, is figure out how to get me out of the fulfillment process sooner. It's a niche, a very tight, narrow niche that I focus on. But the expertise are there. People are out there who are willing and eager to help you. And part of my self-doubt was thinking, who would want to join me on this? Like, why would anybody want to work for me? And so I think that in the back of my mind really had me stalling and prevented me from pursuing really good quality help sooner. And I wish I had done it a lot sooner, for sure.
You made me remember a memory just now when I was like starting to build my team and hire, and I was had the same thoughts of like what if I'm taking them away from like an opportunity that they already have, or like I can't provide like a good opportunity for them. And so like you start to think like this, but then it's like a year or two later and you see like all the progress and opportunities you gave that team. So it's a different mindset once you take that uncomfortable step.
Yeah. And I had to remind myself, like, I've got a vision for this company.
Yeah.
And this is a cool vision.
Yeah.
And we're building something really awesome. I've got a personal mission behind this to help expand access to the alternative asset market, let people invest. The more people know about these deals, the more people can be investing. So, I'm very driven by my personal mission, and people want to get behind that. People want to have like a North Star to follow.
And you really do believe it, but I think there's times also when it's like you're a visionary like us and you start to doubt your own vision, like we were talking about earlier. And so it's like you always have to remember that like we have a strong vision and like it's going somewhere, and get the team behind that, and that's really how it grows, right?
Yep. Yeah.
So how did you start building processes and structure around the business?
It's been an evolution.
Yeah,
for sure.
It always is.
Yeah. And I'm not that type of person. Like if you look at my disc profile, S and C would be those people that really like process and structure. That's not me. I'm kind of a DI person. So I'm the visionary.
What does that mean? The disc, like
it's like one of those personality profiles. Yeah, I can't really speak to the specifics about it, but DISC, they each mean something, and you're kind of scaled between those four. I'm pretty low SC compared to my D and my I. Sorry, I wish I remembered specifically what each one of those letters are. But I'm certainly the visionary.
Yeah.
I've got ideas. I've got, I'm able to have the connections with people to tease out what it is that they want. They've got these problems. I love creative problem solving, but organized execution is not my strongest suit at all. So my project manager, we've adopted a lot of tools over the course of time. Slack, Asana, ClickUp. We're really leaning into ClickUp right now. Slack is.
What does ClickUp do?
ClickUp, it's a really robust project management system. And so we've built out the whole process for each one of our products that we offer. What are our step-by-steps that we need to execute? Because before I was just
building out like SOPs kind of.
Yes.
Like, yeah.
Yep. And you have that basically built into your whole project management system. So there's you can communicate with teams through that as well, tag them, assign things. It's very robust.
I was talking to Micah about that before, and I was like, building like a business, you really have to like people working in the business, right? Like just to say it how it is, it's like they're like a kind of like a terminal for that position. And you want to make sure that there's a book somebody told me a while ago. I think it's like something about abducted by an alien or something, like what happened. That the premise of it is like, what happens if this operations person got abducted by an alien, right? Like is somebody gonna be able to plug into that space the next day and actually follow those processes? And like I think like when you build a business, you need to have like systems and processes for each step. Like you're saying, using these softwares to like have a clear process so that if something happens to this person who's in this seat, like you can switch them out with somebody else and they can kind of plug and play and just continue doing that need for the company, right? Yeah,
you got to know exactly what stage every project is in.
The same customer experience for everyone.
Yeah, 100%.
How did you start building trust with your first few clients?
I really relied on authentically giving my opinion and sharing my insights. My background is not in real estate, it's not in finance. I don't have that to fall back on, but I think that's okay because most of my clients do. So I needed to bring what I know to the table confidently. And I think that helped establish a lot of trust. They could say, like, oh, okay, I trust her vision. I know where we're going with this. And then the end product was light years better than they expected. Most of them were like, oh, it's so much better than I thought you were going to make it. It's like, yeah, I like pretty stuff, so make it look great and, infuse my own quality perspective to bring my unique value to the project.
Can you walk us through your daily routine, what it was in the first 6 months versus what it is now?
Like my whole day basically, or just,
Sure. Yeah, like your day and like how you
yeah.
would involve it with work versus like how you do it now.
Okay. I honestly don't think it's all that different.
Interesting.
The biggest difference. So I'll start at the very beginning, and this is when I'm being the best version of myself. So this is the one that I want to tell everybody about. I don't want to tell you guys about, the
But I think
times.
it's good for people to know the difference, because even if it's
Yeah.
not the best version, like you grow as you build your business and like everyone learns. So
Yeah, my morning routine has evolved over
Okay.
time, but one thing that has remained consistent, off and on, but consistently off and on, mostly consistently on, is first thing in the morning is starting with morning pages. And wake up, open my eyes, go straight to the table, and just start writing on an 8x11 notebook, college ruled.
That's called your morning pages.
It's called morning pages.
What is it?
Yeah.
Journaling?
Journaling, yeah, but it's not even coherent. It's not even legible, which is fine because I'm just writing gibberish. If I need to literally write the word gibberish.
What are you writing down? Everything that comes to your mind?
Every single thing, even if it's like I don't know what to write, you keep your pen moving, saying I don't know what to
Never
write
heard of this before.
over and over and over again. Yeah.
Morning pages.
Morning pages.
Okay.
Yeah, I didn't come up with it. Maybe it's from like the Creator's Way or something like that.
Okay.
But it has
Why
been.
Why do you do that?
I have found it to be the most surefire way to turn my brain on, and eventually you can start to tease out some ideas. You're not always just writing gibberish. You can actually start workshopping through ideas and just keep writing. It has really helped me in conversation. Like when I'm doing my podcast tours and stuff, I want to be very active in my morning pages. I want to be very diligent about it so that I could speak more, more fluidly. Words come to me more easily. It is just, it helps open up the channels very early on in your day. So I love that. I love it. And then, so the morning routine, morning pages. I love when I can work in like an ab workout, or I'm really big on jump roping right now. So some things shift in and out. My dog was always a really big part of my morning routine. We would lay on the floor, go on our walk. He passed last week, so I am figuring out kind of like what my new morning routine looks like without that component.
Yeah.
So yeah, it's a little up in the air right now, but definitely some physical exercise, brisk walk, jump roping, like I said. And then I really also enjoy when I could carve out 20 minutes, set a timer, open up a book for 20 minutes, because I could just keep reading. It's kind of hard to put something down. Your brain's turned on at that point, and so you're going. And then it's time to get ready for the day. Coffee and hit Slack. And Slack is usually very full because a lot of my team is at least 3 hours ahead of me, if not 8 hours ahead of me. Wow. Clients are also usually 3 hours ahead of me between the East Coast and Central Time. It just so happens that's where the base of my clients are. So Slack is full of things to do, things to respond to. I want to make sure my team has the information they need to push their day forward. So I address their needs first, and then I go through clients. I don't want to bog down my day with reacting to everything. And so I take what I need, filter it into like the to-do list, plan out when I'm going to tackle these things, and then just start going down my list for the day and knocking them out in between calls or whatever my daily call schedule looks like. I also open up my calendar and set an alarm for every single one of my calls throughout the day, because I will miss all of them if I don't turn on my alarms. So that's the other thing that I do. No matter how many notifications I have in my inbox that pop up, I need my phone alarm to go off. So yeah, that's a huge one.
What year did you make the most money, and how did that happen?
I'm doing it right now. This is
Awesome.
it. I'm living it right now.
How did that happen?
Yeah. NLP, that MER session absolutely changed the trajectory of how I think about business. And this has not been a good year for real estate as an asset. There has not been a lot of deals being traded for the last 2 years. Investors are holding their money close. I think that's about to change. This big, beautiful bill just popped off, and there's a lot in there about 100% bonus depreciation is back. So I think that's really gonna bust open the doors big time.
100% bonus depreciation. So what does that mean? Because I want you to explain that.
Okay, to the best of my ability. Remember, I'm a marketer, but previously, the last year it was 40%. It had gone down from 60 to 40, so they were like in a way phasing it out,
for
reducing
commercial,
it.
right?
Yeah, so you can take all of the components of the asset will depreciate over time.
Yeah.
Even though the value of the actual asset is increasing. So you depreciate those over the course of X amount of years, 27 years or something like that.
Yeah.
You can push all that forward.
Yeah.
And take those losses, push all those losses forward so that you can get the larger payoff in year one.
Yeah.
In year 1 or 2.
Yeah, that's going to be a huge shift in the real estate market.
Yeah, because that really impacts the returns that investors receive. And, in these deals, you don't typically hang on to a commercial asset for more than 5 to 7 years.
Yeah.
That's a typical cycle.
Okay.
So the strategy is you go in and you increase the net operating income through various methods, various ways of doing that. And then you look for an exit, whether it's a refinance or you sell it. So if you could pull all that depreciation forward and give that back to your investors sooner, that's huge. Everybody wants that.
So what does your current team look like? And how do you keep them aligned?
We're a lean team for sure. We've got about one key player in each role right now between project management, copywriting, designer, developer, and then my SaaS platform, which is called The Links. We've got 2 guys on that one. One's a product lead, and then one is our hardcore implementer. He's amazing. How do I keep them aligned? One-on-one meetings are really helpful for us to just tackle that one whatever it is that they're working on. And then we have working channels within Slack. We have the client communication channel where we communicate with the client in Slack. And then we also have our internal channels. And because we're all on different time zones, we all kind of work at different points throughout the day. We've got that large chunk of the day where we do overlap, but being able to send each other messages, quick huddles, whatever it may be throughout the day via Slack helps us stay on top of projects and keep them moving.
What is a Slack huddle? It's like a Zoom. You can all get on FaceTime together kind of on Slack, or do you do a separate group chat when you say huddle?
They call it huddle on Slack, and it's really just phone calling the person through their computer.
Oh, cool.
So in a moment, it's really easy. You don't have to set up a Google link or anything like that. If you need a screen share on the fly, you can do that. So just a really quick way to grab somebody.
Nice.
Yeah, if you just need to, iron something out.
What's the biggest bottleneck that you guys have at Rae's right now in scaling it?
Fulfillment between production and design work, I think, is really our biggest bottleneck right now. The opportunities are there, the clients are there, and the marketing machine, the sales processes aren't really turned on the way that they could and should be because of the bottleneck in fulfillment.
So it just means getting more designers maybe?
Yep. Yeah. Okay. Building out the team a little bit more, but dialing in, like we were talking about, those SOPs. Before we grow too fast, bring in too many people, and everyone's kind of like, what do? I want to make sure that we've got a good system in place. So
people are working throughout the day.
Yeah.
Not
exactly.
Nothing.
Exactly. Yes.
Yeah. So how do you approach automation and AI inside your business model?
Gosh, this is what I spend a lot of my research time on, is figuring out how do we automate and where is AI applicable and how is it applicable? It's such an exciting time. Automation is super important in terms of just getting things done to the next step. So using applications like N8N and Make or Zapier, those are really beneficial. With AI right now, we're able.
What is that? NAD.
I
know Zapier.
Okay, N8N is like a Zapier.
Okay.
Yeah. a little more.
Help different platforms talk to each other.
Yes.
Okay.
Exactly. Yeah. So that's on the automation side. And of course, you can link that up to chat or something like that to add in an AI component to what it is you're trying to execute. But most problems in business can be solved with automation right now. AI just helps kind of give more of a customized end results. So if you don't really need that, if you could standardize things, I would suggest people don't get quite bogged down by thinking, I need an AI solution for this. No, you probably need automation, and that's fine. But we are using AI right now for a couple of our end products, and that is in the site development for landing pages for deals, because those need to go up so fast. And we're able to do that now, create a very robust landing page using AI to design the landing page, and then we build it within the Go High level within our GHL agency, which is where we're basically hosting the entire capital raise process.
So, sorry, explain that again. So the AI for the website basically it connects with Go High Level to grab the leads, right? Or no? I want to understand.
Yeah.
This.
So Go High Level is a CRM, and they have a website builder within the platform.
Okay.
And we most of the time we're executing the capital raise through Go High Level in terms of communication, email marketing. That's where we host the landing page.
I didn't know you could do all of this in Go High Level.
Super robust.
Yeah, we have a Go High Level account for one of our like for Facebook marketing. We have a separate agency that does like Facebook marketing for us, and they create a Go High Level. But I've just known it to be like the different stages where you can move a lead down.
A
kind
pipeline.
Of. Yeah, how they have their pipeline view, but I didn't realize all these automations Go High Level does.
Yes, you can.
And all the ways you can use it. So they have a website builder.
Yep, they have a website builder. It's not the best, and I don't build my clients full brand websites there.
Sure, I'm sure you use other tools. Yeah.
Yeah, but it's great for a landing page that needs to go quickly and integrate with a lot of automations and actions.
What kind of automations would you have on like a landing page?
So
still coming up.
Wealth is when your money is growing for you while you're sleeping, as they say. It's compounding in the background. It's constantly growing. That's wealth, when you can generate a system that compounds your wealth.
What kind of automations would you have on like a landing page?
So speaking specifically about raising capital, we use a landing page as kind of the hub for the deal. So it's the introduction to what the deal is, what the offering is. And then it's also, if you're hosting webinars, we've got a section where that's promoting the webinar. Click through, I want to attend. Now you've got a funnel of them registering, and then the automations that go off from that.
Like emails or text reminders, like you've just registered for the webinar.
All of that. But then we can also see who actually showed up, who didn't show up, who's clicking through lead scoring. Because now we can figure out who is the warmest lead as well, based on their actions, based on the actions that they're taking. So you get a really good idea of who could potentially be investing in your deal. So that's how the landing page comes into play. And you think you can build it nowadays. There's a way, there's a will, there's a way, and there's a lot of will nowadays. So yeah, hosting it's the hub for the upcoming webinars, for any video components, any, videos of the asset, the pitch deck, the market. We share all that stuff on the landing page for that specific deal. And from there, any automations.
Do you use any other sources of AI in the business?
Of course, we use ChatGPT. I use it to I hate its copywriting. I loathe it, but I use it for everything. I mean, I talk to my chat. Her name is Sully. We talk all day long about any idea I have.
I've never talked to it. How do you talk to it?
You gotta talk to it.
It's just instead of typing everything, you just
couple ways. You could dictate, and then it's just going to type out what you are saying, which is great if you want to riff.
You're not talking about that.
That's one way to do it, and I do that a lot. If I've got an idea I need to tease out, or it's like, hey, I gotta like workshop something out loud.
Yeah.
I'll walk and I'll talk to it. If I want to have a conversation where my chat is like challenging me and poking questions, like, then I'll talk to her there's a black circle and the white lines. Use that icon, and then your chat voice, you can name it, you can give it it can have an accent, whatever. It pops up, and then you could talk to it.
Yeah. And this is the golden nugget right here.
It is amazing. Here's the other thing.
Because you can work out ideas with the AI pretty much. Like, okay.
Yeah. Do you use custom GPTs?
Yeah, what does that mean? Like a pro model or whatever, where you're paying?
You got to pay for the pro.
Yeah, I have that.
Yeah, then you can create custom GPTs.
What is that?
So you are
Like different agents?
kind of, yeah, they do kind of
Sorry,
work like
what is
agents.
the custom?
So a custom GPT is basically, let's call it a channel that's very specific. So when you open GPT and you say new chat, it's just going to open up everything. And it's going to be pulling from your general custom instructions if you've set those at all.
I've never set those. I got to do all these things to make it better. Yeah.
Yeah, definitely. A lot more personalized.
Yeah.
You can upload so much information about your business in there. Because I have a Hey Ray's business brain. It has like the brain icon.
Yeah.
And this is where I go. It's basically my mentorship. My favorite authors, I've given it custom instructions to pull from my favorite authors.
Wow.
My favorite business mentors that I don't personally know.
We got to write this down, guys.
I'll help you. I'll show you how for sure. And whenever I want to, ask it questions, develop a concept, hiring.
After this podcast, you got to help me set this up.
Yeah. I've uploaded all of my personality tests. And then when I'm hiring for a role, it helps me write out the job description and then evaluate who are the best candidates. A lot of times I'll ask them for their
evaluate how. Oh, you'll tell it like what the candidates have, and then
I'll import their resume. I'll import their cover letter. If they did
you're utilizing this thing like amazing.
I ask people to send me a Zoom video. Phase 1 before I get on the phone with them, not Zoom, a Loom. Send me a Loom. I'll take that transcript. I'll pop it in there as well. And so it's comparing all of the different candidates against each other and saying, based on your personality, based on the role, based on how you're going to be working with this individual, everything we know about you and your business, here are your top contenders. And I have interviews with those folks. And my PM right now, she was the one that chat told me I should hire. And she's been awesome.
That's awesome.
Yeah.
That's crazy. It's going to change. It's changing the way we're doing everything.
Everything.
So do you believe in niching down or staying general?
Niching down. I'm a firm believer in niching down before you can go wide. There is an audience for everybody, no matter how narrow and weird you think you are. Good. Be more narrow, be more weird.
How do you qualify a great investor or a client fit?
Budget. That's one,
Sure.
From my perspective, some of my clients do have the freedom to, choose their investors. Like, sorry, you're not a good fit for this.
Mm-hmm.
A lot of them will just take whoever's money. But so from my perspective, when I'm qualifying clients, I really want them to believe in the process. If they're hands off and they are nonchalant about it and they have demands for me that my business doesn't satisfy, it's not going to be a good fit. So we're not going to be able to get a good quality product. At the end of the day, my goal is to make them so happy that they're going to tell 10 other people to give them the best value. Because that's how my business has always grown organically through referrals. So that's like the mode that I need to continue to promote. And if we're just not vibing, it's not going to work.
What is the infinite banking concept and why haven't most people heard of it?
Well, it's that whole process that we talked about in the beginning about whole life. Borrowing against your policy, borrowing against the cash value, and parlaying that into an investment opportunity to grow more wealth, and you're recycling those dollars, basically the no dead end dollar concept. I prefer that terminology. That's
my next question, because I know we touched on it earlier. So
yeah,
it's the no dead end dollars, and how does that framework? How does that reframe how we view money? So you kind of explained it earlier. I want to make sure I understand it. So
yeah, no dead end dollars. How does that reframe how we view money? Well, money has usually been a transaction of coming in and going out, and you just want so much more to come in than you're putting out. And that's kind of the way I grew up. That was how money worked. But the reality is leverage and uninterrupted compound interest are two massive components. And if you're able to bring both of those with the guarantee of no loss into the same one financial tool, that's a huge opportunity to actually grow wealth. Wealth is not being able to, swipe your credit card for large bills or anything like that. That's not wealth. That's a transaction. You're making big transactions. Wealth is when your money is growing for you while you're sleeping, as they say. It's compounding in the background. It's constantly growing. That's that's wealth when you can generate a system that compounds your wealth. And the infinite banking process, or a whole life policy, is the foundational tool. And then the process is the borrowing against it and the mindset that's required to understand it's a long range game. It's not a get rich quick. It's a different process of thinking about using money to make money, using money as the vehicle to grow more and create more, not just a transaction.
Why is whole life insurance better than an IUL, Roth IRA, or 401k?
Yeah, I agree with that statement. Not everybody will. It's not, I think it's, an IUL can have its place in some people's financial strategy. I think for more than 99+% of people, it's not going to be the tool for them. You really do need a very dedicated financial advisor who will be diligent about that product. That product can sneak up on you and bite you in the ass and cost you a lot of money in the long run. Those illustrations are essentially false. There are no promises. It is what a 100%, batting with 1,000, this is what you're going to get. Well, what are the odds you're going to do that? So slim. So what's the reality of it? We're not going to show you that. We can't show you what the reality of it's going to be. So it's
I don't
not,
understand what you're saying. What
so
do you mean?
I'm referring to the illustration, and the illustration is what the insurance agent, we're talking about the IUL specifically here. That's what the insurance agent will show somebody to map out what the long-term play is for that product, for the IUL. We do the same process for whole life policies. The difference, though, is that there is no guarantee of no losses on an IUL, whereas whole life has that. An IUL is based on a 1-year chassis. So every year your cost of insurance is being reevaluated, and that increases the cost exponentially for that product. There are a lot of levers that go into an IUL, and for that reason, it's a very complex product. And most people are not equipped to sell it and manage those policies at all. And I think it's a very serious, very advanced product that most people shouldn't be getting involved in. And it is sold unethically and inaccurately. 9.9%, 9.9 times out of 10 is the reality of how those products are being sold and pushed. And, they're telling you could do infinite banking with it. You absolutely cannot. You cannot. So I don't bother with those. It's not my firm belief. It doesn't align with my values. My value is that a life insurance product, at the end of the day, is an insurance product, and you're transferring the risk to the insurance company, the risk of the loss of your life. With an IUL, you're essentially taking back on that risk. And that just doesn't make sense to me. So it's not something I pursue. You also mentioned a Roth or a 401k. Each of those have their place. I think if it's valuable to pursue the 401k through your company, knock yourself out, do it, especially if you're getting the match, by all means. If that is what you're capable of managing at that point in your life, do it. Everybody's at a different stage of their financial stability, growth, education. And just because Joe over here is doing XYZ, that doesn't mean it's the right move for you right now. It's certainly something you could work towards and build towards. So right now, if a 401k is what makes the most sense, do it, but continue to learn about all the other options that are out there, because there are other options. Roth is great, but you've got caps on that. So, it's limited in what you can do. Self-directed Roth, self-directed 401k, these are going to be your best options when it comes to those types of products, so that you can actually invest in real estate through your self-directed IRA and your self-directed Roth. Those are the best ways, I think, to use those products.
So if someone is under 30, how should they start their first policy?
Well, start with a phone call. That's the best time to start it. You are the youngest you'll ever be in that moment, and you are likely the healthiest you'll ever be. This is a life insurance product, so you do have to qualify on a health basis. And the cost of your whole life policy doesn't change for the rest of your life. You're going to be paying the same premium forever. So when that's the case, get it while you're young. So that's the best time to start
Can
a
you have
policy.
multiple policies or switch
Yes.
between? Okay.
Yes, you can have multiple. Because remember, your human life value is going to continually grow. So your
Change.
capacity
Yeah.
for the amount that you can have coverage for will expand. Your first policy isn't going to max out your human life value anyways. It shouldn't. No. So there will always be room for you to have others. You should, I believe, also pair it with a term policy, a convertible term. So right now I have a whole life and I have a convertible term. When I was learning about this, I was like, this is really awesome. There's something here. I don't know what it is, but if I get hit by a bus tomorrow, I know I'm not going to qualify. Not because I'll be dead, but I'll have injuries or whatever. Who knows what would happen? I don't want to dequalify myself tomorrow. So I got a convertible term policy while I still learned. That's $18 a month. Nothing. And I felt like a rock star because if something did
What's
happen
that
to me,
worth? Like, what's $18 a month worth?
$1 million policy
Okay.
for me at the time.
Does that mean your cash value is $1 million right now? Or
no, so that's a term policy. Terms don't have cash value. That's only
Okay.
the whole life policy.
Okay.
The term is that traditional policy, lasts X amount of years. You pay the same rate, and then it ends, and you've got nothing to show for it. But during that period, your family was protected. It just gives a benefit. That's all it's capable of doing.
Okay.
So that's why it's low in cost typically.
Okay.
So that's what most people have. And you've got the traditional version or the convertible kind. The convertible kind gives you about 10 years where you can convert it into a whole life policy. So I open up a term life at 30, $18 a month. I've got $1 million of death benefit. So if something happens to me, my family's covered, my properties are covered. I can even kick some to friends, let them take a sabbatical or something, So, but it's also a 10-year convertible one. So that means when I'm 40, who knows what my health will look like? I could, have cancer. Who knows what will happen? But it's still going to take my health record at 30, which will allow me to qualify for a whole life policy, another one, because I have a whole life as well.
So they'll base a new whole life policy off of that 30
current health
original?
Yes.
Ah.
Yes. So I've been paying all this time for this coverage for a term policy. And if it expired, I really get nothing out of it. But what I really do get out of it is I'm buying time until I can open up another whole life. But at the health rating that I was at 30, which is a huge advantage.
Can you walk us through a case study of someone who's used this concept to fund their business or retirement?
Absolutely. You can fund your business and fund your retirement at different points in life, for sure. A basic case study would be, let's say you open up your whole life policy, and all right, you could do a dump in. So maybe you sell an asset, you sell a piece of real estate, and you've got $100,000 lying around. Like, what do I do with this? I want to make the smartest investment with it. You learn about whole life policies, you learn about infinite banking. Like, that's a great way to guarantee I'm never going to lose this money and use it to let it continue to grow. So you take the 100K and you do a dump in. And that means in that first year, you'll be able to access about anywhere from 75 to 90K of it, to borrow against it. The money's going to stay, $100,000 is going to stay, and it's going to continue to compound at the rate that it is growing.
Can you ever take out of it without borrowing against it?
You're not going to want to do that until you're in retirement.
Okay.
Yeah, and there's an order of operations in which you do that, whether it's a policy loan or it's a withdrawal. But yes.
Makes more sense to borrow against it.
Yeah, especially when you're in your earning years, you're still making money, and you want to grow your next thing. Borrow against it, take out that money, and use it to fund your business, or you can put it into a passive investment in real estate, which I really like, or you can use it to start an Airbnb. Whatever your heart speaks to you, go do that thing to ensure that you're going to get cash flow back so that you can pay down the loan and then build your available cash value back up. So once you pay back the loan, you've made that amount available to borrow against again. So if you got 100,000 in there and you borrow 70, they're not going to let you take out another 70 while you've got a loan out for 70. So pay it back, and then you'll be able to borrow against it again.
What's your answer to people who say life insurance is a scam?
They've been talking to all the wrong people, for sure. In a way, I think IULs are a scam. Yeah, the way it's being sold is a scam. But my answer is,
In what way?
like the IULs. How is that a scam?
Were you scammed by it?
No, I learned pretty early on not to touch those.
Okay.
So that was I was very
I've
fortunate.
heard other people actually say the opposite. I'm not the opposite, that the other one's bad, but the IULs are like the best way to go.
Yeah. I don't believe that at all to be true. And when you look at the fundamentals of that product, most people that are selling it don't understand it. And quite frankly, it's very robust. I couldn't even explain it to you entirely. But what they show you on that illustration is what they're selling it based off of. The illustration is a 100% best case scenario. If everything goes according to plan, this is what it's going to look like. And isn't that just amazing? It's never going to go according to plan. It's never going to go according to plan. It's based on calls and options, and the insurance company has to get it right every single. It's never going to go according to plan. And then there's so many other variables.
Can you lose on it though?
Yes.
Okay.
Yes, you can have to pay more money into it later in order to salvage it, and that's most likely what's going to happen.
Interesting.
Yeah. So the network of like whole life practitioners and purists, if you will, that I find myself in for a long time. A lot of these folks have been calling for like, let's see an IUL that has panned out as illustrated. I have never been able to come across anybody bringing an illustration forward that has actually worked out the way that it did.
The illustration means, because I haven't experienced buying one of these, so it's just, you're talking about, you sit down with somebody, agent selling you this, and then they're going to go through like a deck, and this is what you mean by the illustration.
Yeah, the pro forma, if you will, if we're using some
right
real estate terminology. It maps out, here's where we're at year 1. By year 45, here's what all the numbers, the figures are going to look like. So there's a guaranteed component and then a non-guaranteed component. With an IUL, very little of it is guaranteed at all.
But it's presented in a way where it's guaranteed, kind of?
Yes.
Got it.
Yes. So there's a lot of misunderstanding. People go into it with a lot of false hopes. They don't even realize the reality. What are the odds of this actually playing out the way it's being sold to you? It's not.
How do you personally use your policy today?
Right now, I'm still building the wealth in it. I'm dumping money into it every chance I get.
Do you have like a target or a goal of where you want to be at before you start pulling money out?
Not necessarily at the moment. I think when the opportunity presents itself, I'm going to know, like, yeah, this is the thing that I want to do. Obviously, it's real estate. That's probably going to be my biggest play, is constantly putting it into.
So you'll borrow against it to buy assets?
Yeah.
Okay.
Yeah, whether it's passively or actively.
So when you guys got all those Airbnbs, did you use life insurance policy just to get them, or you guys just?
I wish I knew about it at the time.
Okay, got it. So if you did know about it, that's the way you would have gone, probably, right?
Probably not, because borrowing money from the bank in that moment was cheaper. My loans are 3 to 5, 2 to 3, exactly. So it may not always be the cheapest option, and that's totally okay. Then go get the cheapest money that you can get.
Do you have some loans at 2%? 2% something?
2.3.
That's amazing.
I know.
Where did you even get those? That was just the rates at the time?
That was the rate at the time. So I closed on
that. From
a
commercial bank, or was it like a local bank?
Like
Chase, or just a small bank?
No, I don't even remember. Honestly, it was a lender that we came across and was working with. We shopped around a little bit, just sent out a bunch of feelers.
Can you believe that?
2.3, yeah. It was, November of 2020.
Yeah.
So, yeah, really crazy times.
What are the top 3 misconceptions people have about the strategy?
That it's a scam, and that it's too good to be true, and that it's confusing and complicated. And there are a lot of a lot of factors, and a lot of, oh wait, but more, there's more. Yeah, and then there's this, but they're good things, So you can get a little lost in this process if you, kind of the founder of the infinite banking term and the idea, who really publicized it, he uses the term the arrival syndrome. A lot of people just feel like they already understand money systems and how it works. But the reality is they probably don't. They've got arrival syndrome. And so they're not open to this new way of thinking about how you can grow wealth. And I hear it from a ton of people. Like, no, that's just a scam. But the reality is it's not. there is no financial tool that can guarantee no losses, that can grow tax-free. You don't pay capital gains tax on the growth in that policy. And you can borrow against it without questions asked.
If you cashed out and pulled the money out, would you have capital gains tax if you didn't borrow against it?
No, not on the gains.
Huh. It's like a Roth in a way, like the way that
you're putting in after-tax dollars.
Got it. So you are paying the tax on the income before you put it in, technically.
Right.
Got it.
But not on the growth of it, which is not how it works if you go and invest in the stock market. You still have to pay.
Well, with a Roth, you would, like a Roth IRA, you would be able to pay the taxes now, and then when you take it out, you don't pay taxes. The way I understand it.
Yeah, you've got limits on that, though.
Okay, I didn't know that.
Yeah, on the amount, whether you can qualify for that product and how much you could put in.
Yeah, and there's your annual limits. I think you can only put in like 6,000 a year or something like that.
Yep.
So why haven't you started to use that, like this process yet, like with your own policy and borrowing against? It's just because it's early stages for you of like building it up?
I just want it to build up.
Okay.
Yeah. So when I started learning about this, again, I started with the term. I was like, okay, I want this whole life. I got my whole life as I was transitioning out of my job.
Got it.
So it's been like, kind of building this business and contributing to whole life.
Reinvesting into the business as
every penny that I could.
Because you look at it as your warehouse. So and any extra income goes straight into the policy, right?
Yep.
Is there limits to what you can put into it?
On an annual basis, yes. How the policy is written.
And is it different per every person's policy?
It will differ for everybody because it really depends on what your goals are, what, how you want to approach it. And so there's a bit of a window. There's a minimum and then there's also a ceiling, and you can fall anywhere in between that, basically.
What's your vision for Hay Raise and the no dead end dollars movement in the next 5 years?
Okay, so the vision for Hay Raise is leveraging automation, AI, need to supercharge this thing and create a platform where operators can come in and complete all of their marketing assets that they need by using AI paired with our human creative vision and helping them kind of structure this whole thing. So it's eventually going to become a platform for raising capital for real estate more than it is a branding and marketing agency right now. And the reason for that is because I'd love to have an exit. That's just what I would like. And that's hard to do when you're the creative vision behind something. You are the company, without your direction, your creative direction, a lot of things can shift and change. But if there's a platform that has structure and consistent outputs, then there's a software as a service there that can be implemented into another business, whatever it may be. It's a lot of options there. That will allow me then to transition more of my focus to no dead end dollars. And that's really, this is the message that I want to be sharing. Whole life isn't a trend. It's not going anywhere. It's been around for hundreds of years. And there's still just a drop in the bucket of people that even know that it's an option. It used to be the way that people saved for retirement. There were pensions and things like that. Pairing that with a whole life policy, though, that was how people set up their finances. It was very common. Well, in the 80s, go figure, that's when they started dumping money into Wall Street, and the 401k was created, and people started to move money into the 401k because it was being sold as this amazing retirement tool, and you can invest in the stock market. So, investor sentiment has really changed, and people have believed that Wall Street is the end-all be-all for growing wealth. That's how you do it. And there's a way you can, sure, but there are still other options available. So I want to bring back that whole life policy option into the main conversation. Do all the other speculative investments all you want, whether it's real estate or Wall Street or any other alternative.
So what did you say happened in the 80s? Go figure.
Well, in the 80s, there was a big push for investing in the stock market.
Okay.
A lot of marketing was, a lot of people started transitioning to that because the 401k also became a tool that companies used to take the onus off of them to provide retirement pensions for their employers. So
instead of having to do pensions, they were like, going to the stock market.
Why don't you, they set up the 401ks and now you can invest in the stock market.
Okay.
So it was pitched as this wonderful alternative. But, you've given 30, 40 years of your life to this company for them to take no onus in, that pension just is no longer available anymore. So now all of the responsibility is on you to grow your 401k and set up your retirement.
Gotcha.
For better or for worse. But so a lot of money has since moved into the stock market as of the 80s, and that has become the primary way that people are thinking that they're saving for retirement. And we're really seeing the first generation of people that have 100% dependent on the 401k to support their retirement. We're seeing them live that out in retirement. And a lot of them are realizing they're not going to have enough money to last. It's not working out as it was sold.
Yeah. Awesome. And so what would you tell 20-year-old Adrian Rae about money, creativity, and fulfillment?
Don't hold back. Like creativity and fulfillment, that's the part that I'm going to touch on first. I'm in an awesome book club. And one of the recent books that we read is called The Courage to be Disliked. And there's a lot that's packed into that about Aldean psychology. It's an awesome read. But kind of the underlying message there is kind of the title, The Courage to be Disliked. And it's not, the whole book isn't as literal as that sounds, but I feel like a lot of my inhibitions and hesitations have been around, well, what if I fail? What are the people going to think of me? What are the judgments that they'll have on me? All of these things that are so stupid and such a dumb waste of energy. And I wish I just went forward with, blissful ignorance, because I'm naturally a smart person. I've got good sense of judgment. I wish I trusted myself more to go out there and build what I've always wanted to build without being afraid of taking the risk. So yeah, live boldly is what I wish I would have told myself. And, I don't beat myself up for not knowing about finances at a younger age. I think some people are lucky enough to have those types of mentors and the resources. But it was around around 25, I think I picked up Milton Friedman, Capitalism and Freedom. I loved it. And I was never an econ person. I was never a finance, nothing like that. I've always been in the creative field. I've always been told you're going to be a creative, you're going to, whatever. That was always going to be the thing. And so that really opened my eyes to like this other avenue that I found very interesting. And that led to just learning to think like an economist, think a little differently, view the world a little differently, introduced to real estate. How does money really work? Start asking questions and just got very curious about things. So I'm not mad that I didn't start sooner. I just wish I pushed forward with a little more gusto from the very beginning and didn't feel so strongly that when I was brave enough to put myself in rooms, I wish I didn't rooms of, people way smarter than me. I wish I truly believed that I belong there. It's taken me a long time. I've paid for a lot of masterminds to be surrounded by very smart and accomplished people. And that has been the right move from day one. But some of my self-doubt and hesitations around feeling like I didn't belong led me to hold back. And I haven't been able to, probably leverage and make up for some of that lost time that I otherwise could have really capitalized on if I had a little more gusto and belief in myself.
You said gusto a few times. What is gusto like?
Oh, I don't know, actually. I think it just means like bravado or like getting out there and like
putting some
having
energy
passion.
into it?
Yeah. And like being brave.
Yeah.
To put yourself forward and step up, not hide in the back, but really be bold and confident in what it is you want to do and be willing to show people like, hey, I don't know what I'm doing and I'm going to screw up, but who wants to help me out? People are going to raise their hand. People are going to help you out. You just got to, be brave enough to be able to admit that.
What are you reading right now that's shifting your perspective?
I'm actually in between two books right now. I'll touch on the first one because it pertains to Rudy, my dog who passed. I think it's called Going Home, and it's about dealing with the loss of a pet and what that means. I got him when I was 25, so as far as I'm concerned, that's my entire adult life, and I made a lot of career decisions that I just wanted to make sure he had the best life.
Wow.
He's a 100-pound dog. He cost me a lot of money over all these years of living in very high cost of living cities, all the vet bills and everything. And I just poured everything into him. And that was my identity. He was 100% like everything. It was Adrian and Rudy. So I just started that one to try to, kind of work through the grief and the process. Aside from that, though, Thomas Sowell's Economic Facts and Fallacies. And I think this is a really important book to be reading right now, because we're fed a lot of ideas about what is the best way to rent control, for instance. All of these different urban planning strategies, pay differences between the sexes. So all of these different topics that we believe these sound bites on, that we're fed sound bites through, TikTok and headlines. It's so easy to come up with a headline that's going to stir emotion in somebody, and then people grab onto that and they go and repeat it and they repeat it and they repeat it. And these are the fallacies that we have grown to believe. When you get down to the data and you actually look at the economic impact of these different decisions that are being made, you can see over time that they have not panned out. Tariffs, for instance. We know that does not work. We have the history to prove that. So, it has been very eye-opening, and I think it's a really awesome book, and it's not dry. I think anybody could pick it up and read it. It's very well written, and it goes through different categories and topics and different subject matters, and it breaks it down because of a lot of real-world examples. And it doesn't tell you what to believe. You could, draw your own opinions based off of the facts that are presented. So it's awesome.
Who's someone in your industry you deeply admire and model?
I feel like I'm in so many industries. Somebody in my industry that I deeply admire and model. Wow, that's a hard one. I wouldn't think that one's so hard. I definitely have mentors and friends that I go to. Maybe I ought to find out who that is and start modeling some successful people. It's not that I don't admire them. I'm just trying to think off the top of my head. Somebody in my, so which industry am I talking about here? Let's think marketing. You've got the big players. I got to give it to Cody Sanchez. She was essentially a nobody and created, used her past experience to start teaching people what she found massive success in, and understood the game from very early on, the social media game, and how she's going to get her brand out there, her personal brand, her message, and she's built this empire. So, and she started with her, contrarian thinking was a master class back in the day, or an educational platform. I'm not even sure if she has that anymore. I don't think she needs it. So I remember listening to her early on a podcast. It had to be 2022 because I was in Arizona. And then I didn't hear her name for a while, and then it popped up again, and then boom, there she is everywhere. I was like, whoa, that's, you got to pour a lot of money into efforts like that, but consistent inputs creates, big outcomes. So I really admire what she's created. I don't agree with everything that she says, but I don't need to, that's okay. So yeah.
Last question. What's your personal why and how has it evolved?
My personal why is helping people realize that there are other paths for growing wealth, and that there are ways that you can do it without. You can be a creative. You could be dubbed all these things that aren't typically the profile of somebody who can take control of their own financial legacy and their own financial future. A lot of the artists I would represent, they're artists. They're not, they've got financial advisors and financial managers and things like that, other people with letters behind their name that they put so much trust into. I want people to realize that this isn't rocket science. It's fundamentals, and anybody can learn it. You just have to be open to it, open to learning kind of something new. And once you do, you realize it's a game. Building wealth is a game. Life is a game. And when you gamify it, it can become a lot more fun, and you can see where there's room for strategies. Your eyes become open to new possibilities. And so obviously whole life is an amazing tool that I really believe in. And I want to teach people that this still exists. It's been around for over 200 years and it's not going anywhere. So use it because it's awesome. Real estate, I believe, is one of the strongest alternative assets. And, people always need a roof over their head. It's stable. Markets are going to come and go. Different cities will boom, some will bust. But the fundamentals, if you follow those to a T and you're not looking to get rich quick, you're looking to build steady wealth, it's not necessarily a 30-year play. You can really ramp up 5 to 10 years, make a huge change in your life. There's the in-between. Like for me, it took me a while to realize I'm here. I envision my life way over here. But anything between there is an improvement from here. So if I'm aiming to get here, but it feels so daunting and like, oh my God, I'm never going to get there. It's like, but you're going to have benefits along the way. You're going to continue to grow. And by taking one step further here towards this destination, you're going to increase and improve your current situation every single day. And for so long, I could only see A and then Z. And every step in between just felt like it didn't exist. I was like, wait, if I just take one step forward, I'm already going to be better than I was previously. Mm-hmm. So just take the one step forward, learn something new, start to apply it. And life will be gravy.
Adrian, that was powerful. I appreciate you pulling back the curtain and sharing the real journey, the wins, the losses, the mindset, and strategy. These are the kind of conversations that move people forward, and I know that this one will stick with our audience. Thanks for tuning in to Built to Scale. If you got value from today's episode, do me a quick favor, subscribe, leave a review, and share this with someone building something great. Your support helps grow the show and makes it easier for me to bring on even bigger names and incredible guests like Adrian, so thank you. Follow me, Quinn Vincent, on Instagram, YouTube, LinkedIn, and TikTok for daily behind-the-scenes insights and momentum to fuel your journey. Until next time, keep building, keep believing, and remember, legacy isn't given, it's built.